guys, welcome back to a brand new video. I'm RexFinance, and to say I'm excited to do this video today is an extreme understatement. We even got the fedora on, so you know this is going to be a banger of a video, and I expect 2,000 views on this video or it's a bust. Help me out with that by hitting the like button down below. Let's hit 100 likes. Last time I asked for 100 likes, we blew it away and had like 300 likes. So all I'm asking for is 100 likes. So if you have the time, hit the like button. On top of that, this has got to be my most requested video in the last 2 weeks. People are interested in this company, and this company is EROS International, who is merging with STX Entertainment this July. And as you can see, these two companies took one step closer to finalizing the entire merger and going through with the merger. And this will happen by the end of July. Today, the CCI, which is the Competition Commission of India, approved the proposed deal involving EROS International and STX Entertainment. EROS International is an Indian-based company, and STX is an American-based company. EROS is actually a stock I've recommended 2 or 3 times in the past on my channel, in the June stocks video as well as my July stocks video. If you haven't seen the July stocks video where I picked the top 3 picks for the month of July, make sure you guys watch that video because it's a great video. So click the card right there if you're on mobile or the computer, or I'll leave a link in the description down below that you guys can click on. And today, as you can see, EROS was up almost 18%. On the news that the CCI approved their proposed merger. EROS has not came out with an official press release regarding this yet, so that in itself is holding the stock price down more than it should be, and even STX Entertainment hasn't came out and said anything quite yet. So I have a pretty strong track record on this channel so far. I recommended buying Workhorse stock at $2.84, which is actually my average cost basis on the company. And if you look at the stock price today, man, Workhorse is right around $17 a share. So I have made so much money on that company. And I think that stock price of Workhorse is going to continue to go up into and after July 14th, which is the deadline for the United States Postal Service next generation delivery vehicle bidding. So there will be a new Workhorse video next Monday. So if you guys are excited for that, stay tuned for that. Wait till Monday. I'll get to Workhorse, trust me. But before we start, I want to know, how many of you guys own EROS shares currently? If you do own them, comment down below how many shares you own and at what cost you paid for those shares. I'm really curious on how you guys are doing with your investment. Also comment where you think the stock price will be after the merger and into 2021. So the first thing I like to do when looking into a company is looking at the balance sheet, the income statements, the statistics, how many shares outstanding, all that stuff. And I gotta be honest with you guys, pre-merger, we're talking pre-merger before STX and EROS combined. If the merger falls through and you're stuck invested in EROS, I'm gonna give my honest opinion on their balance sheet and their income statement. To be honest, their balance sheet is not great. They only have $46.2 million in cash compared to $224.5 million of total debt. That is not a great look, to be honest. It's not the worst thing in the world. I can get past that. But what do we look at next? Well, I like to look at the income statement. And if we look in the past a few years, 2017, 2018, 2019, we can see on this top line that's highlighted in blue, they're growing their revenues, and their cost of the revenues isn't really increasing. So that is good news. Their profitability is coming to fruition. They are a profitable business right now, which is big if you're looking to invest in a company. The income statement, in my opinion, is just mediocre. There's revenue growth, sure, but it doesn't necessarily break the bank. So how can we fix this? How can a merger between these two companies lead to more revenues, more prosperous growth for this merged company? To start off with, this website here, I'll leave a link down in the description. It's an article by Business Wire. Go click this. It has a lot of information on this merger, what the financials are going to look like, all of that stuff. But the balance sheet is going to be improved by itself because they're extending the average due date of all of their debt on top of they have access to a $350 million credit revolver. So that additional cash is going to make their balance sheet look so much better. In addition to that, their income statement after the merger is going to be rocking. I mean, rocking. STX has really, really big margins on the films they produce. In 2019, they had $400 million in revenue, and that number is only going to grow. If we Google STX movies, I'm sure you guys recognize some of these movies on this Google page. I've personally watched a couple of them on Netflix. You can find a lot of them on Netflix. I've watched The Foreigner. It was a great movie. And I also watched Den of Thieves, which is also on Netflix. I highly suggest you guys watch those two movies, especially if you're looking at investing in this company. You want to understand the quality of products that the companies you're investing in have. So an easy way to do that is watch one of their movies. Watch a couple of their movies. Watch some EROS International films. And you're going to figure out what you're investing in pretty quickly. In addition to that, India is the fastest growing media market in the entire world. Ahead of the United States, ahead of China. They are the fastest growing media industry in the entire world. India's population keeps increasing. They're being stuck at home just like we are in America because of this disease. So they have more time to watch movies and TV shows. And guess who the leading provider of that is in India? That's EROS International for you. Right here, I'm going to highlight this so you guys can see it. They have 188 million plus EROS Now registered users and only 26 million paid subscribers. So they have a lot more free users versus their paid subscribers. So how are they making money off this? Well, they're introducing ads into their service, especially EROS Now for these free users. So every user of their platform is going to be monetized and monetized in a great way. On top of that, all businesses thrive if they can convert viewers to paid subscribers because they make more money per consumer if they're a paid subscriber versus just a free user watching ads. Everybody hates ads. I'm sure you've seen an ad in this video and you hit skip right away because you hate ads and you want to get back to watching this awesome YouTube creator, don't ya? Speaking of which, if you guys are new or returning and not yet subscribed, you're doing something wrong, so hit that subscribe button. If that is not grayed out, you're doing something wrong, like I said. So, they're monetizing their entire user base with ad revenue, and they're going to be converting more and more of their users to that paid subscription platform. And if we look at EROS's fundamentals and quarterly reports, we see that the subscription numbers are going up. Now, there hasn't even been a formal press release about them introducing ads and what type of revenues that'll bring to their company yet. And when that happens, I mean, it's another catalyst for the stock to go up. In addition to that, they already have partnerships with Apple, Microsoft, Amazon, the three biggest companies in the world right there. They have partnerships with them. They have partnerships with NBC and also Google and YouTube. So they are set up very, very nicely to push their content to a new target market. Now, they're not going to stop advertising and marketing to the Indian base because that's their growth right now. That's where the EROS side of this business is going to be focused. They're going to be focused on India, but on top of that, they're going to have a side market in America now because this is going to be an American-run company after this merger with an American CEO. So EROS in itself, the EROS business on its own, is going to grow drastically over the course of 2020, 2021, and beyond. On top of that, you add STX Entertainment, which makes all these fantastic movies with wide margins, so they're making a lot of money compared to how much money they spend producing the movies. That's big. We're talking about a ginormous company at that point. So, they're going to have an American CEO and they're going to be American run, like I mentioned. This is going to allow them to really kind of take on this streaming market in America and across the world. They're going to be able to take Netflix head on. They're going to be able to take Amazon Prime head on. They're going to be able to take all of these services head on because of what a large library this combined company is going to have. When we talk about all the TV shows and films that EROS has created and produced, and add the STX movies and films to that, their library is ginormous, and they produce very, very high quality content. Like I said, I encourage you guys to go check out their content for yourselves. So you may be wondering, what position do I actually own in EROS currently? Well, I only own 865 shares at an average cost of $3.16. That's a market value of $3,300, but let me tell you, when I first invested in Workhorse, $3,300 was right around what my market value of that investment was, and today that market value is around $30,000. So I really think this company is going to be able to produce me gains equal to or more than Workhorse has to this point. However, on top of that, as you can see to your left, I own some short-term call options with EROS that I'm already up pretty big numbers on. Now, I went in on these short-term contracts today, right after the news released that the CCI approved the merger. Now, I don't know when the official press release is going to be. I don't know when STX and EROS is going to come out and say that their merger is complete and is official and will happen. I don't know that. But I'm taking a gamble and guessing that it's going to be before July 17th because those options expire on the 17th of July. Now, if they don't have a formal press release before that expiration date, I'm not going to be in trouble either way because I bought these call options at a $5 strike price, and I think this company is going to be easily at that price and higher by the time these options expire. So I'm holding on to these options, I'm holding on to my shares, and I really think I'm going to see some massive gains. Again, remember to comment down below how many shares of EROS you own and at what cost basis. Also, let me know if you don't own shares currently, if you are convinced to buy some shares now after watching this video. So I've mentioned I think this can be another 10x of my money in the long term. But in the short term, you may be wondering, Rex, where do you think this company's headed in the next month to 2 months? Well, EROS stock hit $4 today before cracking down and drawing back a little bit into the close. But tomorrow, I really expect EROS to break the $4 wall and really get beyond that price to $4.50 and beyond by the closing bell tomorrow. And that's based solely that India has approved the merger. Now, when the official merger press release is released by STX Entertainment and EROS International, I think EROS' stock is going to be valued between $6 and $8 per share. On top of that, when the increased subscription numbers come out, I think we can be talking about $9 to $10 a share. Now, those subscription numbers are going to be coming out in the quarterly report, which will be coming out here in the next month or so. And after the press release saying that ads have been turned on for all of their free users, I think we can see a $12 to $13 EROS stock in the next 1 to 2 months. If you guys think that's realistic, let me know down in the comment section. That's just what I think. That's not guaranteed what'll happen. That's just what I think, so don't sue me if that's not what happens. From there, from that $12 to $13 range, we're going to have to see where everything goes, how the big money managers, index funds, you name it, view the merger news and how the merger goes and how it goes through, how the future company looks after the merger is complete will all determine where the stock price goes. So with that, guys, that's all I had for you today. If you guys enjoyed this video, leave a like down below. Again, if you're not subscribed, you better hit that dang subscribe button. All right? Check out the 2 videos down in the description. Use my referral link for Robinhood to get free money. Who doesn't like free money? And with that, I'll be back on Friday with a brand new video. So stay tuned for that, and peace out. Out.